profile of Bank Islam Malaysia Berhad. Bank Islam Malaysia Berhad was established on 1st July 1983 and located at Menara Bank Islam, Kuala Lumpur. The mission of Bank Islam is to provide solutions that deliver value. Meanwhile, its vision is the bank that advances prosperity for all.
Assalamualaikum warahmatullahi wabarakatuh. My name is Marshada Lili. Now I will present the profitability ratio analysis for the year 2023 until 2025. This ratio measures the bank's ability to generate profit from its asset, equity and financing activities. First is return on asset. The formula of return on asset is net profit divide total asset times hundreds. Based on our calculation, in 2023, ROA was 0.67%, calculate from a net profit 650 million and total asset of 97.0 billion. In 2024, ROA decreased to 0.60%, with the net profit falling to 571.1 million, while total asset remained relatively stable at 96.8 million. In 2025, ROA further declined to 0.54% as net profit decreased to 557.2 million and total asset increased to 104.1 million. Next is return on equity. The formula of return on equity is net profit after tax divide shareholder equity times 100. The result as a follow: 2023 9.2%, 2024 0.8%, 2025 0.1%. The decline in ROE reflect lower profitability despite a gradual increase in shareholder equity from 7.07 billion in 2023 to 7.85 million in 2025. This suggests that the bank generates lower return for its shareholder over time, mainly due to decline net profit. But not least, net interest margin. The formula for net interest margin is net financing income divide average earning asset times 100. The calculate ratio 2023 2.48%, 2024 is 2.34%, 2025 2.07%. The continuous decline in NIM showed that the bank earned less financing income from its earning asset over the year. This may be due to lower financing yield, increased competition, or change in the interest rate environment that's compressed profit margin.
The first ratio is loan to total asset ratio. The formula is calculated by dividing total loans by total assets and multiplying the result by 100. Based on the calculations, the ratio was 73.46% in 2023, 71.78% in 2024, 71.07% in 2025. The second ratio is liquid asset to total asset ratio. This ratio is calculated by dividing cash and short-term security by total assets and multiplying by 100. The result shows that the ratio was 5.18% in 2023, 4.47% in 2024, and 2.76% in 2025. This calculate ratio provide the basis for evaluating Bank Islam liquidity position, which will be discussed in the next sections.
The NPL ratio is a key financial metric used to assess the health of bank and lending institution. It represents the proportion of loans they are non-performing, meaning the borrower has failed to make scheduled payment for 19 days or more. The formula is non-performing loan divided by gross loan and then multiplied by 100. Okay, for Bank Islam in 2023, the ratio is 0.94%. For 2024 is 1.06% and 2024 is 0.97%. Okay, the credit loss provision to a total asset ratio is a financial metric that measures the amount of credit loss provision a company has set aside to cover potential losses on its asset compared to total value of its asset. This ratio is calculated by dividing the total amount of credit loss provision by the total value of the company asset. For Bank Islam in 2023, the ratio is negative 0.00445%, meanwhile 2024 is 0.00065%, and 2025 is 0.0135%. Okay, the credit loss provision to a gross loan ratio is a financial metric that measures the amount of loan loss provision a bank has set aside against its gross loan portfolio. It is calculated by dividing the total amount of loan loss provision by the average outstanding loan balance. This ratio provides insight into bank ability to absorb potential losses and its credit risk management practice. For Bank Islam in 2023, the ratio is negative 0.006%. Meanwhile, in 2024, 0.009009%, and in 2025, it's 0.0189%.
Assalamualaikum and good day to Doctor and everyone. For my part, I will present the capital adequacy ratio of Bank Islam Malaysia Berhad for the years 2023 until 2025. Capital adequacy measures a bank's ability to absorb potential loss and maintain financial stability. In this analysis, we use the total capital ratio, which is calculated by divide total regulated capital by risk-weighted asset or RWA and multiple by 100. Based on calculation shown in the table, Bank Islam record a total capital ratio of 90.35% in 2023, 20.50% in 2024, and 80.30% in 2025. This result indicates that Bank Islam maintains strong capital adequacy through the 3 years period. Although there was a slight decline in 2025, the ratio remained well above the base 3 minimum requirement, showing that the bank has sufficient capital buffer to absorb potential loss.
Management efficiency ratio. Cost-income ratio is the common way to calculate it. The formula is operating expenses divided by operating income and times 100. Cost-income ratio in 2023 was 59.71%, increasing to 62.27% in 2024 and 64.69% in 2025. Explanation of ratio. First is profitability ratio. Profitability ratio is the ability to produce earning over time in proportion to its revenue, operating expenses, balance sheet, asset, or shareholders' equity. The common profitability ratio include return on asset ROA, return on equity ROE, and net interest margin NIM. Second one is liquidity ratio. Liquidity ratio are a set of financial indicators used to determine a debtor capacity to pay down current debt commitments without raising external cash. For most banks, loan assets are the most important. The loan to asset ratio LAR is a liquidity indicator that represents credit and indicates the proportion of bank assets to total debt over the course of a year. The last one is management efficiency. The common way to calculate management efficiency ratio is cost-income ratio in daily banking operation are directly impacted by the cost-income ratio. It influences decisions about workforce, technical investment, and resource allocation, in addition to acting as an indicator for bank managers and employees. The third one, asset quality management ratio. When analyzing whether a bank's lending decisions are successful or failing, it's one of the first figures that investors look at. The most direct indicator of credit quality issue in a bank's loan portfolio is the non-performing loan (NPL) ratio. A higher ratio indicates that more debtors are falling behind and the bank will probably need to put aside more funds to cover expected losses. The fourth one is capital adequacy. Capital adequacy is a measure of a bank's financial stability. A bank's financial stability is gauged by a capital sufficiency. It's evaluated based on the bank's ability to control possible risks without going any bankrupt. The ability of a bank to survive financial losses while carrying on which business as usual is referred to as capital adequacy.
Okay, profitability trend. The return of asset ROE of Bank Islam Malaysia Berhad decreased from 0.67% in 2023 to 0.6% in 2024 and 0.4% in 2025. This suggests that throughout the course of the 3 years, the bank ability to generate profit from its total assets declined. The bank received a lesser return of each ringgit invested in asset, indicating a decrease in total asset usage efficiency and indicating that asset development did not translate into equivalent profit growth. Okay, return on equity. The Bank Islam Malaysia Berhad return on equity declined from 9.2% in 2023 to 7.8% in 2024 and 7.1% in 2025. This decrease suggests that Bank Islam profit decreased over time in relation to shareholder equity, despite a rise in shareholder equity from 7.07 billion to 7.85 billion. The bank may have poor profitability, greater operational expense, or slow profit growth in comparison to expansion of equity if the declared ROE indicates the bank was less successful in using shareholder capital to create earnings. Net income margin. The net income margin of Bank Islam Malaysia Berhad dropped from 2.48% in 2023 to 2.3% in 2024, and then to 2.07% in 2025, suggesting that the bank net financing revenue was lower than its average earning asset during that time. A lower margin resulted from a reduction in net financing revenue from 2.18 billion to 2.01 billion, despite of increase in average earning asset from 88 billion to 97 billion.
Management analysis, cost-income ratio. Cost-income ratio, CIR for Bank Islam Malaysia Berhad was 59.71% and increasing to 62.27% in 2024 and 64.69% in 2025. Increasing cost-income ratio shows that Bank Islam Malaysia Berhad has reduced efficiency of operation since the bank needed a higher percentage of revenue to pay its expenses. If this situation remains, it could have negative effect on profitability and reflect the need for improved revenue in generating strategies or more effective expenses control.
Let's begin with liquidity analysis. The first ratio is loan to total asset ratio. This ratio measures the proportion of bank assets that are allocated to financing activities. The ratio decreased from 73.46% in 2023, 71.78% in 2024, 71.07% in 2025. This declining trend indicates that Bank Islam adopt a more balanced asset allocation strategy while still maintaining financing activities as its primary sources of incomes. Although loans remain the largest components of total assets, the bank gradually diversifies its assets portfolio to manage risk more effectively. The second ratio is the liquid asset to total asset ratio. This ratio declined from 5.18% in 2023, 4.47% in 2024, and 2.76% in 2025. This decrease suggests that the bank held fewer liquid assets over time, resulting in a smaller liquidity buffer available to meet short-term obligation and depositor withdrawals. However, despite the declines, Bank Islam continued to maintain sufficient liquidity to support its daily operations and customer needs. Overall, the liquidity position showed that Bank Islam successfully balanced financial growth with liquidity management, ensuring adequate funds while continuing to expand its financing activities. Next, I will discuss the asset quality analysis. The first ratio is non-performing financing ratio. This ratio increased from 0.94% in 2023 to 1.60% in 2024, before improving to 0.97% in 2025. The decline in 2025 indicates better financing quality, effective credit risk management, and successful loan recovery efforts. The relatively low NPF ratio throughout the period also reflects a healthy financing portfolio. The second ratio is the credit loss provision to total asset ratio. This ratio increased from negative 0.0045% in 2023 to 0.0135% in 2025. The increase reflects a more prudent approach by the bank as it allocated higher reserve to cover expected credit losses and strengthening its risk management frameworks. Finally, the credit loss coverage ratio improved from negative 0.006% in 2023 to 0.0189% in 2025. This demonstrates stronger provisions coverage and enhanced protections against potential financing losses in the future. In conclusion, Bank Islam maintains strong asset quality throughout the 3 years period. The bank demonstrates effective credit risk management, improve financing quality and increase reserve to safeguard against potential losses, while also maintaining a stable liquidity positions.
Now, let's look at the trend analysis of the total capital ratio. This chart illustrates the trend of Bank Islam total capital ratio from 2023 until 2025. As we can see, the ratio increased from 19.35% in 2023 to 20.50% in 2024. This increase indicates stronger capital adequacy and improvement ability to absorb potential loss. However, in 2025, the ratio decreased to 80.30%. This decline was mainly due to an increase in risk-weight asset from RM 50.41 billion to RM 53.22 billion as the bank expanded its financial activities. Despite the decrease, the ratio remained well above the base 3 minimum capital requirement. This shows that Bank Islam continued to maintain sufficient capital buffer to manage risk and absorb unexpected loss. Overall, Bank Islam remained financially stable, well capitalized, and resilient through the period from 2023 until 2025, demonstrating strong compliance with base 3 capital adequacy requirement. Thank you.
Overall, Bank Islam Malaysia Berhad demonstrates stable financial performance and effective management throughout the period from 2023 to 2025. Despite challenges such as rising financing costs, higher impairment allowance, and economic uncertainties, the bank successfully maintained a net profit of more than 550 million ringgit each year. However, profitability ratios such as return on asset, return on equity, and net interest margin show a gradually decline over 3-year period. From a liquidity perspective, both the loans to total asset ratio and the liquid asset to total asset ratio decreased. Although this indicates a reduction in liquidity buffers, the bank still maintains sufficient liquid asset to support its daily operations and meet depositor obligations. In addition, the bank's asset quality remains strong with the non-performing loan or NPL ratio staying below 1.1% throughout the period. The bank also strengthening its credit loss provision, reflecting a prudent approach to managing credit risk. In terms of capital adequacy, Bank Islam maintained a strong capital position with its total capital ratio remaining well above regulatory requirements. This shows that the bank has sufficient capital to absorb potential losses and support future growth. However, the increasing cost-to-income ratio suggests that operating expenses grew faster than income, indicating that greater attention should be given to improving operational efficiency and cost management. In conclusion, if our advising investor today, I will classify Bank Islam Malaysia Berhad as a strong and stable institution capable of handling future economic shock due to its solid capital position, good asset quality and consistent profit. However, one worrying point is increase in cost to income ratio, which show that operating expenses are rising faster than income. Therefore, management needs to focus on improving operational efficiency and cost control to maintain profitability and sustainability in the long run.